Hey, it's Clay, and this will be a video chart on ticker symbol SFET. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like to this time frame that does a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. Summarizing today's price movement in and of itself, just using normal trading terminology, this is what we would call a gap and trap. What do I mean by gap and trap if maybe you're new? Well, on Wednesday, the price closed right there, and then this morning, the price opened up right there, hence the gap up. Problem is, after the price gapped up, sure, it actually showed some further signs of power by working its way up there, but got up there, some poor souls bought, and then at that point, it was just all bearishness the remainder of the day. And then the final 30 minutes of the day, there was just that much more bearishness. So again, summarizing today's action in and of itself, a total gap and trap. And the next key level to watch now going into Friday and the next week is going to be this gap close location down here at 52 cents. And 52 cents, very, very important. And I'm not saying this is what's going to occur, but if the price were to go down to 52 and then just continue on down, at that point, from a very literal perspective, that would be putting the price right back inside of this area where the price essentially started. And not to insult your intelligence, but price movements that go back to where they were, not exactly a sign of true power, true strength, or anything like that. In fact, I would call that a pump and dump at this point in time. Because when you stop and think about what would have happened if that does actually occur, that would imply that the price has made a great move, which right there, you got to give credit where credit's due. That was a fantastic move. And then within the time span of a couple of days, so a very short amount of time, if the price were to go back to where it started, I mean, that is the epitome of a pump and dump. So right now, it's already been a gap and trap. There's no refuting that. That's very obvious. But the question going forward is this gap and trap going to turn into a pump and dump? And that 52 cents, for the reasons just discussed, is, in my mind at least, that very important level that's going to dictate whether or not this has any sort of chance at trying to recover, or if the price literally goes back to where it was and hence put in that pump and dump status. So we'll see how this one closes out the week on Friday. But overall, yeah, pretty brutal day. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.